Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Happy Tuesday, everyone. By the way, this is going to be front and center in my mind all day. And if you haven't already, we're going to be basically just under 12 hours, 11 hours from now. We've got our big webinar, at least big webinar for me. It's a really meaningful big webinar for me in terms of what it is I know is going to help you all turn the corner. Super stoked about it. Tonight at 8, simplertrading.com/key. And one of the keys to this week is going to continue to be monitoring the economic calendar. So let's continue to watch that. This is where opinion, this is where volatility, and this is where volume is going to come in and reveal to us what is coming up next. Participation has never been more important than it is right now. When is that participation going to come in? When is that attention going to come in? Today at 10 a.m., consumer confidence numbers. FOMC member Waller is speaking. Those are the big two events for us today as we go into tomorrow with some new home sales, crude oil inventories, and wrap things up going into the week with the ECB press conference. Heads up, I know it's 2 days away, but the more that we can prepare by recognizing levels and trends before a major event, ECB gang is going to affect most definitely the US dollar and yields. So we definitely want to keep that on the radar. 2 days up, but if we can prepare, we have a game plan that we can continue to fine tune today and into tomorrow. We're going to be better prepared for that hot zone on Thursday. So yes, preparedness is absolutely the key. All right, gang. As always, this show is about your questions. So let's go ahead and jump on into them. All right, kicking it off with, all right, what do we have here coming up first? All right, Prince is asking, just to clarify yesterday's answer. All right. If I'm to take a day trade, either breach retreat or V score. So just to give everyone some context for the lingo, breach retreat is a time-based retracement triggered entry in the morning. V score is a volume derived support or resistance entry that you can take any time of day. My stop loss in terms of volatility are the highs and lows of the HPMR. You could use that, Prince. There's no one way to do it. If you want to use the HPMR, that's fine. Those are two different setups, however, right? Breach retreat is different than a V-score. So a time-based entry based on the opening range has its own stop loss. The V-score setup, volume-derived support or resistance entering the trade, that can rely on HPMR if that's part of the equation for the entry, right? So again, it's all about, so this question here is really about what is the setup, right? What is the setup? And a lot of what we've been doing throughout 2022 has been one setup. Whether you all know it or not, if you've been trading with me in any of the rooms, everything has been about one setup that starts with volume. So I would say start with that V-score, Prince. Use the validity of that setup. And if that setup is V-score Darvis, there's your validity. If that setup is V-score hourly price movement range, that's your setup. So I think the first question is, what's the setup? Because the stop loss is not going to be the same for both. So I hope that makes sense. Hope that helps. Thanks for the question. All right. We have next up, Chris George. How are you? What are my thoughts on natural gas? Sure. What are my thoughts on Natty? Let's pull that up. I've got a small position in BOIL on the daily. All right. And by the way, gang, BOIL, BOIL, UNG, there are a number of ETF alternatives that allow us to watch the levels and the setups on natural gas, but execute the idea in a different, maybe more risk controlled, maybe lower cost symbol. And in this case, Boyle, UNG, options on those could be very powerful. All right, looks like we might just have rallied into resistance for the past year. And by the way, Chris, kudos right off the bat, because you're asking a question about natural gas. You're executing the idea in the alternative, but you're still looking at the futures contract. So very, very impressed. That's awesome. Natural gas is in a downtrend. As far as rallying into resistance, right? So the question is, what's the resistance going to be? Couple levels that I'm looking at, right? And both of them are going to be levels that you can see right here on my chart. 5.10. We have a volume ledge. We have a level at which we know participation, attention, were concentrated there in a slightly more intense way than other levels. The other level that I'm looking at would be a reversion to the mean. All right, technobabble alert. What does that even mean? Volume has wandered a little too far away from sort of the normal operating range. And I'll look for that reversion, that return to that sort of home base, if you will, before continuing the downtrend. So whether that be the volume ledge, which is sitting really just above where we are right now, 5.510, or a reversion to the mean on the V-score, either way, both of them are the same thing. We could rally up maybe a little bit higher before we continue lower. And remember, seasonally, the run-up in natty gas happens far before winter. So that run-up has already, for the most part, seasonally peaked in October. From about October into January, February, unless we have warnings of storms coming, or unless the EIA increases the expectation for winter's intensity by increasing what's known as the HDD, the heating degree days. In other words, we're going to need more natty. The weather is concerning us enough to increase the heating degree day count. Unless we have something like that, the natty's bullish days are likely behind it. So you've got both a seasonal trend and a price trend and, quite frankly, a volume trend working for you here. So good stuff. Good stuff, Chris. All right, next up, Mr. Walker says, hit that like button, y'all. Now, I appreciate that. And if our Charts and Coffee show is moving the needle for you, if any of our content is moving the needle for you, thank you as always for the questions, the comments, the feedback, and absolutely smash that like button. I do appreciate it. And all right, next question from Mr. Walker. 6E and FXE, what are the trends I am watching? So 6E, by the way, is the futures contract for the Euro FX, the currency. FXE is the ETF alternative of that Euro currency. All right, so what do we have here on the 6E? Is it a downtrend anymore? No. However, is the path of least resistance still to the downside? Yes. My expectations for brand new lows are lower when we're no longer in a downtrend. We're clearly still being influenced by dollar strength, euro weakness. So the better side of the trade is the short side. What's the trend I'm watching here? We don't have a trend on this particular time frame on the daily. We could definitely kind of switch up the script and say, hey, what's the trend, say, intraday? Or what's the trend on the weekly? The trend on the weekly is firmly down, but that's going to change your time horizon, right? And anytime we shorten the time frame or lengthen the time frame, we're going to change the time horizon, right? But right now on that daily, I like the short side, Mr. Walker, but with a far more limited downside. I'm not looking for significant movement, say, past the 9,600 level. All right. Okay. So next up is the new HPMR. So then we update. So yes, thank you, Avi. Lorna and I, for those of you who want to know, what is an hourly price movement range? An hourly price movement range is a volatility-based tool. Intraday volatility. There's really nothing else out there like it. And what it does is it looks back on what's the typical nature of a number of symbols between 8 and 9, 9 and 10, 10, 11, throughout the day. Because the movement at different times of day is quite different. And so we take a historical volatility look at intraday action. And of course, intraday volatility is always in a state of flux. Therefore, we want to make sure that that data, the ranges that we're looking at, are reflecting the personality of the market. So we continue to monitor that and we update it as that needle moves so we can stay on the most accurate levels. So they look wider. So what's the change? Volatility, my friend. Volatility will change not only the distance between that support and resistance of the HPMR, it will change the HPMR zone itself. Which, think about that. What does it tell us? It's warning us about a kick higher in volatility. It's warning us that the markets in that volatility measurement are riskier. It's warning us how to better place or it's giving us a heads up. It's giving us guidance on how to place better stops. It's giving us a heads up that if a range is very, very wide, maybe we need to find a little bit more specificity and confirm certain zones within the zone, right, as higher probability. So, for example, what does that mean, Rob? Use a slow stochastic, use a V-score, use a volume ledge, use time to better manage that width of that volatility zone. So the change comes from the nature of the movement, right? The change comes from the nature of the movement. All right. So next up is TradingView's volume ledges are awesome. They are. And by the way, I call it a volume ledge because it literally looks like I'm scaling up the side of a mountain. And therefore, what does that actually mean? Where the volume ledges protrude, and you can see this a little bit better here. When these things protrude from the, and I know it's a little faint, I do that on purpose because I don't want it to take too much of a visual footprint, but you can see here, point of control, volume ledge, when these things are protruding from the right, what is it telling us? There's a lot of opinion focused there. There's a lot of opinion concentrated there. And I love the view from TradingView, and it's a really good supplement. It's probably a distant third. It's a really good supplement to things that I'm already looking at using volumes. I love the questions, gang. Let me show you here, just to give you an idea of what I'm talking about. And this is the euro moving up higher right now, yes? And to the question about volume, here's your ledge. In fact, this is your point of control. We'll talk a lot more about this tonight. So if you're wondering, Rob, what the heck's a point of control? It's where the most volume has been based on a certain look back. Take a look at the way in which we kind of clung to this thing. Like it has gravitational pull. And all along, take a look at this. What is that telling you? Well, arrows are nice. This is more likely to move higher than it is lower, right? So since 3 a.m., as you've meandered here along this volume level, right? Don't be short. Don't be short. Don't be short. Don't be short, right? That's the majority of the opinion right here. Okay. And so, yeah, as we move higher, it's no surprise to me that as we are able to clear that ledge, like a climber, right? As I'm able to clear that ledge, I've got a little bit more open space to keep climbing. Unfortunately, Sam, there is not anything equivalent to this on TOS, which isn't a huge problem because I don't really need this on TOS as long as I have this and even this giving me an idea of where either resistance is waiting. Take a look at your volume weighted average price. When you anchor that thing properly, it's an anchored VWAP. Look how well it basically highlighted how and when the momentum was going to trigger, right? Getting above that anchored VWAP. And then you couple that with this. So that's why I'm not as concerned. If you're not on TOS, we have other ways to glean where these levels are going to be. But I agree with you. Now, if you can do it all on TradingView, notice just the depth of analysis that I have on that single chart. So yeah, is there anything even close? No, but we have other ways to work around that. And that's those tools allow me to not be paralyzed by not having those levels on toss, because I'm going to see them in a different way. All right. Thank you for the question, Sam. Andrew, how are you? Recently took my Futures 101 class. I was wondering, is there still a way to sign up for? Oh, yeah, I don't use them anymore, Andrew. We've actually cut the strings. I love the platform. It does a lot of other cool things, but in terms of hourly price movement ranges, we brought that internally so I can control the way I like to see that data better, and I can update it in a way that, as many of you are noticing, the accuracy of the zones are just, while very much influence on the work that I've been doing with that data going back 10 years, it's now representing the kind of adjustments that I felt we needed, which is not just the zones, but also a more Raghee specific view of the kind of volatility that we're seeing, which is kind of what I think earlier Prince's question was, in terms of using HPMRs, using V-score. And I'm going to go back to, anytime you have a specific setup that is using volatility and volume, you're using something that most folks don't even see, right? Those are zones most folks don't even see. So Andrew, we brought those in-house. Yeah. All right. Bernie says, I thumbs up before the live stream even begins. Bernie, thank you. I appreciate that. That's awesome. Thank you very much. All right. Next up is, what's the study? Hey there, trading newbie. What's the study at the bottom of the screen? Oh, sure. And trading newbie, you'll definitely want to join the webinar tonight, because I get into market structure. That is a market structure tool. This is all about structure. No, what the heck is structure? That word is used a lot, right? Structure really simply is bullish, bearish, chop. Bullish, bearish, chop. We measure that with two pieces. Momentum, which will almost always, and really always, precede a trend, and then the trend itself. In this case, actually, you can see it here, and I'm still looking at the Euro chart. Notice on the intraday time frame, we were neutral, 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 neutral on the trend, but we were going back and forth between bullish and bearish until finally, right around 8:30 a.m. Eastern, the momentum went bullish. It's far more likely we can remain neutral bullish, or just go bullish momentum, boom, bullish trend. So do you see how it preps us directionally? And that's what it does, right? It's that insight into what is the path of least resistance. And that goes back to market structure. And that goes back to really Charles Dow's work, right? Charles Dow really emphasized more than anybody that there are four distinct natures of the market. There's four distinct ways in which the market moves. And if we can always work with that, right? We can always work with that. We're going to be on the higher probability side. Now you start to layer in where the participation kicks in. You start to layer in what the typical volatility is. Now you're getting a much more 3D, dare I even say 4D view of market behavior versus the very 1D, one-dimensional view of price only, right? Most traders trade with price only, and they're not looking at sort of the depth behind that. When you add that depth, you're seeing through walls. You've got X-ray vision, and that's always going to be an edge, right? Okay. All right, gang. And just like that, our show is up. So thank you, as always, for being a part of the Caffeinate and Dominate crew. Gang, tonight's webinar is really a personal one, and I think it's going to resonate with a lot of you, which is, how do you deal with fear? How do you get tactical? How do you avoid panic? And let's be frank, how do you find a way to be productive in a market like this? And it's not something that, there's a method. It's not something where you have to just sort of just hope and pray. There is a method behind it. And so I'm going to walk y'all through how I found the process and how it's working now. And a lot of you who are in the Sector Secrets room and in the futures room, you've watched this short term. You've seen how well this has worked, even on a 5-minute chart. So whether you're a 5-minute trader, a daily time frame trader or a weekly time frame trader, you're going to see it works. It's just because we're studying the nature of us, the participants in the market. So really excited for this one. I will see you tonight at 8. In the meanwhile, as always, where's my coffee? Thanks for being a part of the Caffeinate and Dominate crew. I'll see you tomorrow. Well, I'll see you tonight, but I'll definitely see you tomorrow as well. Be good to each other, gang.